Taking a look at today's interest rate markets, let's look at the 10-year note futures as they continue to move higher today. 10-year note futures trading higher for a fourth consecutive session, and today we're looking at that futures market, the September future, which is now the lead or the most heavily traded future, going up to the 110 handle, 110 even currently, just off the intraday highs where we did see it print over 110 briefly. But nonetheless, holding on to the majority of the gains here, and we're looking at the futures market now trading up to the highest level since the middle of May. And driving factors today, really more data-driven appears as we move through this week. ISM numbers yesterday coming in below expectations. Now, yesterday afternoon, the Atlanta Fed Now data came out. We continue to see that moving lower as GDP revisions continue to move lower, so indicating a slowing of economic activity. I think that's providing a bid to the Treasury markets. Now, today was the JOLTS job openings data, indicating that the job openings came in below what was expected. I think the interpretation there is that the labor market continues to move more into balance. And the perception is that the Fed will view that as a potential stepping stone as to possibly moving on rates later this year, should they continue to see inflation continue to trend lower as well. And today's yields, we're looking at that 10-year yield down 7 basis points to 433 basis points. Intraday hitting 431 basis points, which is the lowest print from a yield standpoint going back to early April. So basically 2-month lows when you look at the yield intraday. Before we did see a little bit of selling pressure, moving those yields slightly off the intraday lows at 433 basis points. Also, the inversion in the yield curve has widened today as the back end rallies more so than the short dated. We're seeing the yield curve moving lower pretty much across the board, but the back end certainly is rallying more so, moving those yields lower and increasing that inversion between the 2-year and the 10-year that a lot of market participants like to watch. So shifting dynamic here today. Some buying pressure continues in the 10-year note futures as we are pushing up now to basically 3-week highs, which also correspond with 2-month highs.